Trading around news. So opportunity or recipe for disaster. Do you remember our most important rule? Live to fight another day. News events can seriously screw up your day, week, month, or worse if you are caught on the wrong side of things. So the calendar I use is at forexfactory.com. So you can customize it based on country and potential event impact, among other things, but those are generally the most important. So each country's individual stocks will have a higher impact based on news events happening in that country, but with most futures and commodity assets being more affected by what's happening in the US. And that's just due to the size of the financial markets here. So the type of event will determine the level of impact based on previous volatility, as most news events repeat either monthly or quarterly. So how to trade around it. So as discussed, volatility is important for us as traders, but most importantly is being aware of what is happening. So mitigating potential accidents that are preventable. So large news events can completely throw off our plan when the event reports surprise conditions that were unexpected. For this reason, we need to have multiple plans and scenarios for what will happen, what we will do if A, B, or C happens. So sometimes the volatility will just accelerate and the market will get getting to our planned entry area. Sometimes it can completely reverse the largest of trends. Trade smaller, right? Make sure you adjust your risk based on the increase in volatility. This usually means trading smaller size to allow for larger stops, but also larger profit targets. Make sure you're flat, no position for up to 5 minutes before the news event. This is more for day trading, for swing trading, than you're already using kind of like a larger risk area as well. And then where was I going to go with that? You may actually use, the reaction of a news event, right, and the volatility that spikes from that to get a better entry than you thought you were going to get, right? So just because price bombs after, a specific report or whatever, it may just, a lot of times it continues to stay, it'll come back to value. So those tails, right, those long extensions on the day's range are oftentimes, if it's happening, if it's moving against the trend, oftentimes getting in at the lows of those moves or parts of the down move ends up being a really good entry to the upside, right? Or vice versa. So let's see. So where we're at over here. All right. So, okay, we'll go back into that. So make sure you're flat, no position up to 5 minutes before the news event, right? And again, this is because sometimes they do happen early. They'll pop off a minute or two. And so if you're waiting until the very last second, then you could get caught in that. And so that's no good, right? So, and then you wait for the initial volatility surge to subside before entering. We want to get a good idea of what the market's trying to do. And then hopefully it lines up with one of our already thought out scenarios, right? So we really want, when price is just flying, right? And I mean, I can't tell you how many times I've traded those market conditions trying to piggyback on the side of momentum. And it's just so difficult, when you've got even a 1 minute chart, right? A 30-point 1 minute bar really does nothing because it doesn't give you any, there's no support, there's no resistance, there's no structure to it. You're really just guessing as to whether or not you should buy and it's going to go another 30 points, or it's going to completely reverse as soon as you get in, and I've done quite a bit of research on this as well. I've gone and back tested and forward tested this scenario as far as breakouts that happen. And again, it's specific volume levels too, right? So let's say I decided, that 1,000, 1,000 on the volume, was a significant level, right? So let's say like the average is like 300 on most breakouts, but whenever it was news and it broke out of 1,000, where the volume was at least 1,000 contracts or more, then significantly large moves happen, right? And then tracking that breakout over weeks, over months of scenarios and years, and then just seeing that there's no correlation, right? It could be 1,000 volume, 1,500 volume, 3,000 plus volume every day or every specific scenario is completely different, and there may be a little bit of, it's pretty much guaranteed that you're gonna get volatility, but the range, how far it goes, whether or not you get a pullback and get a chance to get in, all these things are completely reliant on each day's market activity, and there was nothing that I could do to kind of plan or game it or figure out a way to be consistently profitable with it.